Forward Guidance is brought to you by VanEck, a global leader in asset management since 1955. You'll be hearing more about VanEck ETFs later on, but for now, let's get into today's interview. Very happy to welcome to Forward Guidance for the first time Remi Tetot, who, in addition to being a co-founder of Real Vision, where I used to work, is the publisher of the Mad King newsletter and macro research product. Remi, great to have you on Forward Guidance at last. How you doing?
Yeah, I'm good. Thanks, Jack. Thanks for having me. I've been looking at your podcast for a bit, so I'm very happy to be here.
Oh, it's my pleasure. Remi, how are you thinking about macro in 2024? And I guess we'll start with the obvious, the stock market, bull market, which is largely, to a large extent, being driven by very large cap technology stocks appreciating in price. What are your views on that, and what are your observations?
There is room to go still on the tech side, but it's getting very expensive now. I'm still very cautious. I use the business cycle a lot. I think the business cycle is going to bounce temporarily. So we might see ISM, improve, even get above 50 this month. On the longer period, I'm not sure yet. Now we're having the US it's a bit weird because the stock market, now we're looking at the stock market thinking the economy is fine when before it was the other way around. The big tech, it's creating a bit of distortion. Now they're like 30% of the S&P, or something like that, give or less. But yeah, their revenue is like 70% out of the US, for example. So people will look at the stock market thinking it's fine, the tech is fine, but the revenue is not really being generating there. And then obviously we have the AI narrative, and all the tech stuff, and Nvidia is a big thing in all that.
Right. So tell us about your point about the earnings again, the revenues. Sorry.
So I'm writing a piece now for next month, and I was looking at revenue, the revenue market cap ratio for all the tech companies, all the big ones, and they're actually they're more expensive than 10 years ago, which is odd because all their revenue in the last 10 years is up 10x. Do you think that the next 10 years is going to be up to another 10x? Considering the level of revenue doesn't make much sense, right? In mathematically wise. I don't see Amazon generating 6 trillion in revenue in the next 10 years, for example, unless they kill all the small shops. So it doesn't. So when you look at it like this, it doesn't make much sense. But when you look at all the tech giants in 2000, the ratio revenue market cap was like much higher than what it is now. But again, we're talking about companies that were making 20 billion in revenue. Just Microsoft was doing 20 billion in revenue back then, or 17. And now they're doing about 240. So it's, it's all in terms of like absolute term now. Do we get the same kind of growth forward? I personally doubt it. It doesn't make sense to me, even if you include the AI or whatever you name it. So yeah, I think it's interesting to look at it this way.
Maybe we'll go company by company in the Mag 7. Like, what stands out as the most overvalued? Apple, I have no doubt that its price to sales multiple is significantly higher, even though it has grown. And maybe you're applying your general point to Apple in specific. You say, okay, the iPhone was this incredible thing. Apple Vision Pro, maybe a lot of people are going to buy it, but it's not going to be as successful as that. What do you think of as a sort of fair value for these companies based on earnings or sales?
As well, Nvidia, obviously, it's been the darling of the stock for the last year. Now it almost become a meme stock. I wrote a piece about Nvidia when it was at 400, around the flags around it, and I did say, although there is flags, when the stock trained that out, and there was so many people behind it, like I would not short it. And obviously, that was September last year, so I think the stock market proved me wrong. It went up flying. Nvidia is forecasted to have 60 billion in revenue this year. All right, and 75% of those revenue are data center driven. Now, if you look at the Mag 7 or the Mag 5 in this case, we keep Amazon, Apple, Microsoft, Google, and Meta. If you look at them and look at the capex for 2024, the capex is going to be up 30 billion. Now, a lot of those are for data centers. Now, if you trim it down to Amazon, Microsoft, and Google, which the three of them they have data center product, cloud product, basically. They generate 120 billion a year, which is double what Nvidia is making, for example. Those companies, it's not only AI driven. They need to build bigger data centers because there is more data, it's growing. But you're going to reach a point where data center, they're going to arrive in maintenance and eventually upgrades, but not outsale like we're seeing now. And I think what that's going to happen, Nvidia is gonna like correct dramatically, because if you have 75% of your revenue coming from those, and at some point it just stop because everybody got their data centers, it's gonna create a bit of a problem for them. And the thing I realized with Nvidia is when they talk about a fraud with CoreWeave, that they lend them money and they bought them the GPU to open data centers and stuff. And I think I thought about it, and because I saw another company or two other companies doing the same with them, and I'm like, okay, what they're actually doing? It's a VC strategy. They're throwing money at company building data centers to compete with the big ones, and eventually the one that's left, they're gonna have a big tech in it. The big upside for them is that they make them buy the chips and they give them access to the chip first. So what we're gonna have eventually in the next 2-3 years, all those small companies, like 90% are going to fail, and they're going to be bought for cents on the dollar for the big tech by the big tech company. And eventually that's going to like collapse the price of GPUs and computing power and stuff even further. This is the kind of stuff I think we're looking at in the next 2-3 years.
The next 2-3 years, but you think it could have room to run for a little bit? So it's more of a longer term call than a short term call.
This year, I think Nvidia have room. If the CapEx, if the big company have not spent the CapEx money yet, they're going to reach their target on their revenues. So they're going to keep going. They're going to deliver. That's going to work. Unless we got a recession, something like a big downturn, that they're going to have to review their spendings and stuff. I think this year we're good. Next year, I'm not sure. Not so sure.
What do you make of the tremendous growth in their revenues? I think their revenues year over year is up something over it more than doubled, and I think
it's 260%.
Yeah, is up something like 500%.
It's all data center. The growth in revenue is in data center. It's nowhere else. They have a bit. They have some. It's a bit flat in gaming. Something else going down. But the big thing is data center for them. Data center is not a recurring business that can last for decades. It's not. It's a structural thing. Like in 2000, a lot of investors were throwing money at broadband companies to build the internet and the network and stuff. And what happened then? Then all the big broadband companies end up buying the small ones. So it's the same thing that's going to happen. If it's a structural technology thing, same thing is going to happen eventually.
That makes sense. The semiconductor business is a cyclical business. When do you think it will turn? Because I know, 2020, 2021, huge boom in semiconductors. There's a shortage. 2022, the cycle appeared to turn, and it, everyone thought, and I don't know, so I trust what people say, it was going to get much worse. But then you have this huge AI boom, and Nvidia, their data center business, it was up a tremendous amount. But Remi, I think it depends on how much gold you think is at the end of the rainbow. I think like what's undeniable, and what you and I are talking about now, is there's been a huge CapEx boom for the hyperscalers, Meta, Google, Amazon, and they have spent the money. Like people saying, "Oh, Nvidia, the growth isn't there." Like the growth is there. It's in the financial statement. That is a fact. You're saying that the CapEx boom will be something of a bubble because the hyperscalers spending all the money, they won't realize the investment. Like, we're talking about the picks and shovels, Nvidia. What do you think about the end product as someone, if you, I don't know, use ChatGPT or any of the chatbots? Is AI transformational? Is it more or less transformational than the kind of hype that there is now?
I use AI a lot, right? It's a big, I tested also all the products you can think of to really understand. I train, when COVID happened, what I did an online course for a week and get trained at Stanford about AI and how to train models. I wanted to understand the technology behind it. I was the tech guy at Real Vision. So for me, it was making sense to go deeper to the tech, to understand the tech really. So here's the thing. AI is amazing. Okay, ChatGPT, generating imaging, amazing. Making videos, amazing. Now, in terms of use case, all of that, it's actually going to be very limited. Not everyone is going to need it or use it. when you see all those Sora videos coming up last
Hmm.
week, everybody's like, the sentence you're gonna read every single time there is a big thing is like, oh my god, this is amazing, I can't wait to see what they're gonna do in a year. People are replying that over and over and over all the time, and then they compare what was done a year ago with what is done now. The reality is, people are using. I know people using ChatGPT in different ways, but I would say it's a very small portion of it. People that need to use it. The product we're seeing now, I don't see it like it's not going to be used by billions of people.
Yeah, I mean, I'm with you in the point that it's not, a lot of the products are not ready for prime time, and they may be used by high school students or college students to pass their classes for an exam. But if you're actually like a professional person who's, I think a professional person, a human, is still doing better than ChatGPT on a lot of things. Like I think ChatGPT is, it's a jack of all trades. And it's like kind of good at all things, but it's not extremely proficient in one thing yet.
See, I wrote about that a few months ago. Is how to use basically AI is not going to replace a skill you don't have. If you don't have it, you don't have it, and it's going to replace it. It's not going to give you that skill to the level of a professional, right? So let's say you want to use ChatGPT to write economic research. If you don't have a deep understanding of economy, you cannot do it, because he's going to spit whatever, and you cannot check it. And personally, I use it to give me feedback on our work. When I write, I put my content and I ask him to give me feedback to see, if I missed angle or what. Basically, I'm using it as a sounding board. Images, that's great. But again, not everyone want to be a writer, or not everyone needs to generate images or videos. You don't need it. It's very, very limited. Same for the music. And I've tested literally everything I could think of. And now the other thing is, now because everybody run after the same thing, now you have ChatGPT and you have Gemini, Copilot. The market is going to be quickly saturated with too many offers. Sorry, and if there is too many offers, people are not going to be able to choose, because you give them too many choice, and then they're going to end up like moving away from it. And not, you also have we still have the problem of, we've seen the problem with Gemini this week, with the response he was giving you and stuff. So, I mean, this is actually very important, because if it's going to be used at scale and they control what the content is being given to people, you basically kind of control people. So it's still dangerous. Now I'm waiting to see if ChatGPT fixed that in 4.5. I heard they said they were not going to be so woke, but in the end, the problem I think they're going to have is, if they use the data set from people that are woke, is going to become woke, because that's how it's getting trained eventually. So it's you have all that risk of what data set you include in there and stuff.
And how do you think about the future of AI, where we agree that many of the products are not ready for prime time yet, but we've seen they've gotten better so much quickly, and if they continue to improve and reiterate, they may be ready for prime time soon. And how in 3 to 5 years, or maybe 10 years, how transformational do you think AI is? And that's probably more relevant than how transformational it is right now.
Well, I think first, making movies is going to change a lot. That's for sure. Basically all the fillers in movies, they're going to be made with AI now. When you see a guy is traveling and you see the plane in the sky, and that's going to be AI generated. They're going to do that like very quickly now. Stuff like that, all the fillers. Eventually, they're going to also master anyway, filming people, and they're going to increase. So it's the thing. What they're going to do, they're going to improve the productions, but they're not going to make them cheaper, because they're going to spend the money somewhere else anyway. So eventually, maybe they're going to do more marketing or whatever. What it might give is the opportunity to skill people to produce, like cheaper, like good stuff. That's for the video side. Well, customer support, obviously, for anything is going to be AI driven in 10 years, all of it. That's for sure. Now, after that, it's like I said, it's all about the use case. Like someone that works in a restaurant, is he going to need AI? Well, I don't know, unless you remove the waiters, for example, and make the orders through an AI machine, for example. I also think that in 10 years, human input is going to be a luxury.
Human input is going to be a luxury.
Yeah. It's going to be the other way around. If you're skilled and you're good and you can give a human input, then that's gonna be worth money.
So in that future, it sounds like AI has a big place to roll. So is your view on, I guess, Nvidia or AI? Are you kind of a cyclical doubter? You think the cycle is going to turn, but the future is, bright in 2030, and that much of the hype, or maybe is kind of justified, and it just cycle's gotten ahead of itself like it did in 2000? Or are you a cyclical and a secular doubter where you think nope, it's overhyped kind of forever?
It is ahead of itself, the cycle, that's for sure. People oversold it. And like I said, think of it like in 2000 when everyone wanted to build better network because everyone wanted internet. Everyone was buying a computer at home, all of that. Now it's the same thing with with basically processing power. So all those services in the future, they're going to need a lot of processing power. And those processing power data centers are being built right now, right? That's the CapEx, that's the investment, that's happening now. For AI to explode, you need to have a burst because people are going to be able to buy all that power for really cheap. And then the end product is going to become very cheap, a lot cheaper for the end users. And eventually the user is going to end up winning because it becomes really cheap for them. That's the thing. When they buy those data centers, they're going to make the product a lot cheaper for us to use, a lot. And that's when you can really scale it. I think you have the price, which is really cheap, and you have the processing power. I mean, look at broadband. Like in 2000, internet was expensive. Now it was expensive and it was slow. Now 20 years later, it costs a fraction of that for like crazy speeds. The beginning of that was the 2000 when they started to build those networks. Same will happen with AI. It's a structural technology improvement.
That makes sense. What is scarce will become abundant. Do you think is there a slight difference? One thing that appears to me is the profit margins and even the revenues of the picks and shovels companies, which were the equivalent of broadband companies, like the chip companies. Their revenues have increased so much more than the broadband companies. Like one of my favorite books, Smartest Guys in the Room by Bethany McLean and Peter Elkind about Enron. Like all these broadband companies were doing fiber swaps with another where Remi, I'll buy your fiber and you buy my fiber. And then we'll both book it as revenue, even though no cash changes hands, and then we'll depreciate it over time. Like I feel like what you see at the top of a bubble, what I saw, in 2021, and admittedly I was way too early, but was of just total companies lying and going public and issuing all of this hype. I feel like the hype on a scale from 1 to 10 right now is like a 5, and I feel like to know that it's going to, or not, you never know, but I feel like the hype is not that high, and it's only the high quality companies that are generating so much cash flow and growing so much that are earning. Like I feel like I don't see any, it's a derogatory term, but shitco, like a shitty company.
I read your post about it.
Yeah. Okay. Yeah. What do you think about my theory, Remi?
You know what? You put 3 things in that post, and I was like, you actually got a point. He's right. Like we didn't have shit tons of IPO, and we didn't have the fraud yet. Yeah, if you look at it as a bubble, yes. But like I said before, I use the business cycle as a framework. Like that's what I learned at GMI with Raul.
Mm-hmm.
Before COVID hit, we were in the longest economic cycle, basically expansion, right? What happened is in 2018-19, we were slowly digesting the excess of it. It was basically the business cycle was playing out slowly. It was happening. And COVID happened, so it collapsed rapidly and bounced like even further on those crazy stimulus and stuff. Now, I do think that we haven't like digested the previous cycle yet properly because of COVID and because of the liquidity input and all the, there's, I don't know, 6-7 trillions in stimulus and the Fed and all that stuff. I do think that we haven't really digested what we should have on the previous cycle yet. And I think, that's make me a bit uneasy about everything. And I'm very cautious about it. When you look at inventories, they all are in nominal term, they're like, everything is all-time high, basically. I'm not, I'm a bit cautious about all that.
That's a really interesting theory. Tell me more about that about how you think that maybe the economy was going to enter a recession in 2019, but it didn't because we had a 1 or 1.5 month recession in March of 2020, obviously when there's so many people got laid off. I think then when the unemployment rate spiked so high, huge fiscal spending, credit spreads blew out, and a lot of people viewed that as the beginning of a new cycle. Do you agree with that or not, and why?
The business cycle is a boom and bust, right? So you need to clear excess to be able to bounce and keep growing. Now, we haven't cleared that excess. We haven't. If you look at all the charts, you are starting to go down. You have a big spike and then bounce higher, right? We didn't clear the excess liquidity. We didn't clear the excess from the Fed balance sheet. We haven't. What we've done is keep adding on top of that. In terms of cycle, I don't think it's right to think it's a new cycle. If anything, you basically have still a lot of excess to clear in the system. Everybody is thinking a pivot is going to come. The Fed is gonna cut rate. And now when I see the state of the market and economy, I'm like, first, if the market is driving so hard right now, why would the Fed stop QT? And why would they start cutting? They shouldn't do it before. Before there is some flag coming from somewhere in economic data or whatever. Normally it's the employment. We know the employment is not great. I mean, everyone knows it's gonna get worse. It's not a secret anymore. We know it's the last domino to fall, basically. I'm not sure where we're gonna go now, basically. Not convinced.
Like gold did, Bitcoin is establishing itself as a macro asset that potentially helps hedge against the government devaluation of your money. Finally, you can easily access Bitcoin in a low-cost ETF with the VanEck Bitcoin Trust, ticker HODL. Search the ticker HODL in your brokerage app today. Visit vaneck.com/HODLFG to learn more. That's vaneck.com/HODLFG. Now the disclosures. Investing involves risk and you could lose money on an investment in the VanEck Bitcoin Trust, also known as the Trust or HODL. The value of Bitcoin and therefore the value of the Trust shares could decline rapidly, including to zero. You could lose your entire principal investment. For a more complete discussion of the risk factors relative to the trust, carefully read the prospectus linked below. Thanks, let's get back to the interview. Remi, when you say excesses need to be cleared out of the system that weren't cleared out in 2019, what were you referring to? You said the Fed's balance sheet, but what else?
Yeah, all the credit, all that stuff, all the basically money created, in the system, excess liquidity and stuff. You see it. If you look at the chart and you put the trend line on all of them, you can see that we still 3-4 trillion above trend, something like that. And that's taking the trend from 2008. And basically, which is the excess of the COVID, post-COVID, all of that. So it's interesting. Now they are in a very complicated position now because obviously the high yield is a problem for US debt, for the government. We know it. If they don't cut, it's going to become very expensive. The debt is going to pile up and basically compounding with interest and stuff now. So if they don't do anything now, the government is at risk. But if they do, I don't think it makes much sense with the dynamic we see in the market now to do anything if the market is taking high yield, they should keep it. They don't need to inject liquidity, although they're injecting, I know you had Michael Hall, which is the king of liquidity and stuff, which we know they're injecting liquidity in different ways now. That are not so obvious. I think there is still a lot of excess to clear. On top of that, we have an election year, so they have to be careful what they do. Maybe I'm wrong, but I don't see a new cycle, like a full cycle starting now.
And so you're talking about a Fed balance sheet cycle, less of a economic cycle, or both?
Both. I mean, the Fed, they still need to diminish the balance sheet. Okay, let's say something bad. Economically wise, if they do it too early, then they're not going to have tools to deal with it. Those are their tools that we all know they're using. Now, we all know how they're using it. And if they use it too early, they're not going to have it when they really need it. So I think it's going to be a very fine line for all of them now to work on.
QE, they can't do more QE?
They can do QE, but before doing... So QE is depending what you call QE. First, they cut rate, and eventually at some point, they inject liquidity. That comes later, much later. Why would you do it now?
You could say because inflation has fallen sharply. I think what the Fed cares most about, at least what they say they care the most about, is the labor market and inflation. So inflation has fallen from 9% to 3%, and by some measures as low as under 2%. Although those are not measures that are official. If inflation has fallen so much, as inflation falls, the real rate of interest has risen. So policy, if 5 and 3/8 was not super restrictive when inflation was at 9%. Now it's a lot more restrictive. That would the argument go. I don't know. What do you think about that?
Okay, but so if they cut rates or inject liquidity because inflation is down, what's going to happen? We're going to have like an equity rally even further, like risk asset is going to rise up, and then inflation is going to follow, like inevitably, and that could come even harder after that. So it's not a straight. I don't think it's so easy to like, okay, inflation is down and like now we can cut. If you cut too early, you bring inflation back with a vengeance. If you cut too late and there is economic problems, you have bigger risks. So I think considering the dynamic in markets now, if markets are growing without it, you can keep it flat basically. Don't cut it, don't hike it. Just if the market is digesting 5% yield or 4.6, just keep it this way for the time being. Yeah, the home builders, they've been outperforming the S&P big time since last year, although the yields are high. Now because housing is so expensive, people are moving to building because it's cheaper. And if you look at the chart, like it's astonishing. If home builders have been doing well in a high yield environment, you can expect them to go even better if it's safe. Well, as long as they don't hike it, I think we're good, really. I don't think hiking, but keep it flat.
What is your base case right now on the economy and interest rates?
If the stock rally too hard, then there's a possibility on more hike. If it's gentle now, the growth is not like the first 2 months because that was quite crazy. They can keep it flat. I don't see them cutting, personally. I don't think it makes sense because, like what I said, they need to keep those tools for when they're going to really need it. The only concern here for them not to cut is obviously the US debt. The US debt, I think there is a lot of rollover coming in the next 6-7 months. So it's going to become expensive. That's the only thing I would say. It's like, yeah, I'm not sure what can they do here. Because people think they have to cut, that is too expensive. They have to cut because whatever. And I don't think from a logical point of view, I don't think it makes sense personally.
There's some people who say, oh, the Federal Reserve will start its interest rate cutting cycle much later than the market thinks it will, and that view has worked out beautifully over the past 1 to 2 months. The market thought the Fed could hike in March and then in May, and now I think the market thinks it will start in June, maybe even later. Are you saying that the Fed will start in November, or you think the Fed won't cut interest rate at all?
If there is no weakness in economic data, no, they won't cut. We could be in a new. The thing is, if you look at the 10-year chart since 75, so you have that big downtrend for 40 years, and it's possible that we have a new uptrend now where high yield works. The economy can take it now, and real yield is becoming more relevant than pure yield. There is a possibility that we can live like that as well.
Okay, so is the trade to short rates because the market's pricing in cuts that you think won't occur?
Yeah, could be. The other thing is if you look at the stock market and the cutting cycles for the last, again, from 75, I think we had 8. Every time a cut happened, like shortly after, the stock market collapsed. Now, those cuts, it's not the cut provoking it, it's they're cutting because of whatever because of whatever is happening somewhere else. So then the wheel is in motion, right? And the market end up correcting. It's something I wrote about in December or November, and I said, look, we can basically until the first cut belong the market. Until the first, that's it. Just belong simply based on that. Just wait for it, and even sometime you come on the second or third cut anyway. So belong until the first cut, and then you'll adjust when based on dynamic and economic data by when that happens.
And you still have that view, belong until the first cut.
Yeah, absolutely.
Okay. So your trade right now is long in long stocks, long Nasdaq, whatever you told me, until the Fed first interest rate cut, and you think the Fed's first interest rate cut will be longer than the market thinks. So summer of this year or longer.
Belong until they cut.
And so your concerns about AI are more of a mid, a 1 year to 3 year concern. Short term, the trend is up.
Yeah. I mean, well, you look at Nvidia. The trend is up. Yes, but eventually,
Yeah.
what Nvidia is a super leverage play on technology. On those a big tech. That's what it is.
Mm-hmm.
The only thing that make me think twice though is the move we had before the earnings, that big fall and big gap up. I don't think that's very healthy. That's a sign of a very healthy market to see such big moves on such big companies like this. I'm like, it's a bit much, and then you get a 2 billion bid and he goes crazy. I think people are being carried away with the AI narratives. And yeah, like I said, all the data centers business is a structural thing. It's not going to be ongoing for decades. At some point, you reach the limit. Then what happens is you have a rotation to upgrade the hardware eventually.
Right. Yeah, I hear what you're saying about Nvidia going up 12% after earnings. It's not healthy. It is kind of a topping market action. And I think of the phenomenon where when the fundamentals look bad, it is actually frequently a good buying opportunity. But when it makes sense to buy, and when Nvidia's revenues go up 120%, that often is not the best time to buy when it looks good to buy. Similarly, like oil stocks looked horrible to buy in 2020 when the price of oil was negative for a day or two. But then they looked like, oh, I have a great margin of safety buying this shitty oil company when the price of oil is $120. But the reality is the price of oil is not going to be $120 for long. And maybe what you're saying is the price of chips is not going to be so elevated for long.
No, and Nvidia, you're gonna have. I mean, it's gonna keep going up. Maybe touch 1,000. I think unless there is like really bad thing happening, which I doubt. And eventually they're going to do a stock split, which is going to boost it up a bit further anyway, because it's going to become too expensive for retails and Robin Woods and people and all that stuff. So I think then we have that coming, and then we'll see after. My oversight on Nvidia last year was I failed to look at the capex spending of all the big tech corp. I focused on the small company like CoreWeave, which I realized that basically what they're doing is like investing in all the small ones. One is going to stick, and the upside for them is when you think about it, it's quite smart because a small company is going to raise money for a data center. Nvidia is going to kick in. Obviously, if Nvidia is in, people are going to want to join in. And what they're doing, they're going to suck up liquidity from those people investing in that company. The money is going to Nvidia anyway because they're going to buy the GPUs from them.
Right.
So it's like, yeah, it's that because I guess that must be the deal when they invest in those companies, like they have to buy the Nvidia GPUs.
It's a good product capture. Clearly, if all of your revenue growth is that might be unsustainable. But I think of McDonald's. Their business model is they get a franchisee to build McDonald's, and they have to rent land from McDonald's Corporation. It's not a bad business model.
But it's not, because let's say you invest in 10 businesses, you have 9. 9 are going to fail, but one is going to become a unicorn. On long term, that's going to pay off. It's going to pay off your revenue, and then it boosts your top line, your bottom line revenue on top of it. So it's like win-win for them, really. If you think of it this way, of the VC strategy, what they're doing, long term, you actually could pay off dramatically for them.
What do you think about crypto? It's not just Nvidia that's going up. Crypto is going up as well. What are your thoughts?
I don't know if you followed a bit what happened when Luna collapsed and stuff. So I got a bit basically hit by crypto badly 2 years ago. So at the Mad King, I kind of avoid writing too much about crypto. But obviously the big ones now, you have to, I focus on the big ones, and that's it. I'm surprised by the big jump in the last 2 days, to be honest. Even post ETF, I was expecting to see 33. We saw 38.5, so I was not too far. And I think now we have a cycle that's going to be very different than everything we saw before. And everybody comparing this cycle with the previous one is like, it's pointless. I think it's pointless. The fractals comparing the previous cycle with this one. This one is going to be much more powerful in terms of liquidity. I think it's possible that Bitcoin outperform everyone. Not. I mean, you see it year to date is literally beating everyone now so far. I also think, like in terms of dynamic, is going to change a bit if the liquidity is flowing to ETFs. The previous cycle was very DeFi heavy, and people were using the Bitcoin, wiping them up, borrowing against them. All that is not going to happen. So maybe the altcoin is not going to be is not going to be as big as what we've seen before. And obviously now the big play now seems to be happening in gaming this year anyway. I saw some very interesting stuff in gaming. There's a big launch coming coming in 2 days. With I don't know if you know the Portal token.
I don't. What token?
Portal token.
Okay.
They just put it on Binance now to farm it a bit before launch. I think the pool has 8 billion in it. So that tells you how the demand is going to be basically. And that's going to be a token within 200 games from the moment they launch. That's going to be the big things now. I think gaming. I've seen a few projects popping up in gaming, and I'm like, okay, now there's something interesting happening there. There are a few big launch as well. Beside gaming, you have the wormhole token coming out as well. The bridging guys. Bitcoin now is on for you could give any number of where it's going to be next year. Really, anyone is like, you can just throw a number. It's going up and it's going to go up out. Now, the part we don't know is if there is economic uncertainty coming, how people buying ETF are going to react to that. The other thing we can see, I was thinking about this morning, is we could see a rotation from tech to ETF, Bitcoin ETFs as well now. We could see that. I think that's a possibility. So much gain has been done in tech in the last year. We could see a bit of rotation from that.
In this crypto cycle, where do you think the big utility is going to be in terms of people using crypto? They buy crypto for a specific purpose to use it rather than just buying it to sell it at a higher valuation. You mentioned gaming. Tell us more about that.
Like I said, that token Portal is going to be a currency in 200 games. Like if you think Axie Infinity, that was one game, but they're going to provide 200 games in currencies. So that could be like very, very big. The supply is like 1 billion. I think there you have. I've been looking into it in the last couple of days, and I think it can really be the big surprise of this cycle. Half surprise, I would say. What I think is great is this. What I see already in this cycle is projects are utilizing NFT communities. So before, you're familiar with the airdrops, right? You have airdrops and stuff. So before, for example, in the last cycle, big airdrop was Uniswap. So if you use Uniswap, after they launched, they give you, I don't remember how many tokens. And then that's it. This time, they're giving tokens to people that are beta tester. So they say, come and beta test it. We're going to give you tokens. So they make the product better. Then they're going to give token to people that use the product. And then what they do, they give token to NFT holders to specific communities. If you think of marketing, I think that's a great move, what they're doing. Those communities are usually very intense. And giving them, they're going to become very vocal, very loud on social. And it's much, much better than any other product placement you could buy, for example, even on Formula One, let's say, for example. You will get more return on doing stuff like that. The gaming is playing this way at the moment. Not only, to be honest, Wormhole is the same. I saw the same with them and some others. And I think there's like the big airdrop season coming this way now. And really rewarding NFTs community that been like through hell in the last cycle because, no liquidity and price collapse and stuff. So I think that's the emerging thing I've been seeing this year.
Interesting. What do you think were the key learnings for you from the last cycle of 2020, 2021, and then the bust in 2022? And do you think that most of the crypto market has learned the same lessons you did? Because if they have, maybe the next cycle will be different. But if they haven't learned those lessons, maybe the past could repeat.
Well, I don't think we're going to see as much leverage than last time. All right, we don't have, Luna in the end. Luna UST was a big tool in providing leverage. We don't have it this time. We don't have that. We don't have any algorithm, basically any big one, any algorithm stablecoin. So there is no leverage is not going to be the same. So it doesn't mean we don't have a big cycle. We have a different one. Obviously will be LCR, because the last one, was in the end it was an LC. All those farming tokens where you could get, I don't know, thousands of API and stuff doesn't make sense. Didn't make much sense. So this time I think is much more responsible. But what's going to happen also is now you're going to have projects are going to come to market worth billions already, when before they will come to market worth 10, 20, 50 millions and go up. Now, this time it's going to be priced in already. I think we saw it with Jupiter on Solana when it came out. We're going to see it now with Portal, with Wormhole. Those tokens, basically the price discovery is going to be really short. It's going to be very short.
Sure.
Before they will launch their token, and you'll find out. This time, because of the way they're doing it, the token is not coming at 10 cents. It's coming already at $3, for example. We have all the tools that exist for that now. You have new market maker, you have all of that. It's very different than what we had before. What we're going to have, we might have less token that's going to make 40x, for example. They're not going to make 40x, but you're going to have safer, let's say less growth but safer. And I think that's the way it's starting to play out.
That makes sense to me, Remi. And I take your word for it that as we sit here in late February 2024, with Bitcoin, with crypto prices going up but not at all-time highs, that is the current state of things. But how do you think that will change if the price of Bitcoin goes over 100,000? Of course, I'm not saying it will, or as crypto prices, if they continue to appreciate, because the same point that I made about, you're not having basically fraudulent semiconductor companies go public. It's only the companies that are actually making money, and generally it's profitable companies that are going up. In the same way, it's only the blue chips of crypto that now are going, and you're not having those yield pool leverage swamps that are just causing further speculation to ramp up and cause prices to go further than they might if there weren't leverage. What don't you think that if we are in the middle of the crypto cycle now, again, I'm not saying that we are, the reason that you're not seeing those toxic things in the crypto ecosystem is because the price of Bitcoin isn't at 120,000, but you will when it is. Do you know what I'm saying?
Well, not necessarily. So the last cycle, all of that was new. You had new chains coming with new meme coins, with new products, all of that. Now this time, we have all the chains already existing. We have new ones coming. You have new stuff coming on top of Ethereum. You have Last. You have the layers coming as well. You have a lot of new things, but not as much as last time. I think that it's done. All that craziness. Look, we have the ICOs in 2018. We had the craziness in DeFi 4 years ago. Now this time, it's possible that the market is more mature as well and is not going to do that kind of product. It's a possibility. We don't see those this time, and it's not going to stop it to go up. Now, the flow of money is going to be different, but it's still going to grow. It's going to be very institutional driven. Eventually, at some point, like you said, if Bitcoin hits 100K, that's going to be in all the news. Then you're going to start with the retail cycle, and that's what all of that is a possibility as well. I think it's going to be it's something like on those lines is going to play out. Yeah.
So you think that crypto will be in a secular bull market and it won't have a cycle?
Yeah, well, it could be, yes. We have. I'm still waiting to see. It's very early to say that. I want to see sustained flow to it, and more importantly, I want to see how the ETFs are going to react to a correction, to a stock correction, or an economic downturn or a really big stock correction, which is something we don't know yet. We know how people would react in the crypto market, but now that flow of money is different. So I'm not going to say that yet.
Yeah, so that's a really interesting point, Remi, about correlation between stocks and crypto. I think they are quite high. And if Bitcoin just is a triple levered NASDAQ position, the reality is the NASDAQ has gone up a lot. So that's a pretty good position to have with the benefit of hindsight. How are you thinking about the correlation between crypto and stocks? Because in the long run, the stock market, AI is somewhat of a bubble. Then maybe crypto, if the stock market goes down, crypto will go down too, right?
Well, yes, you would think so. But now what I'm thinking of is, okay, let's say the ETF broke people that never bought Bitcoin before. Let's say it's there's some of that money that's completely new. Those people, they just experience what, 20% in a month, something like that. If it keeps going like that, we might see those people allocating more of their portfolio to Bitcoin. Greed is going to kick in. They're going to be like, whoa, it's too easy. And there you can end up having a dynamic of restructuring portfolios for people and taking a bit more risk. We should have that. We should, the bull run is on. When I see those moves like the last 2 days, I'm like, okay, this is happening now. The flow out of Grayscale has definitely declined. Is like almost nothing now, irrelevant. If the demand is coming from the other side without the flow out of Grayscale, then we're on for some fireworks, right? Like now, and I'm surprised. I wasn't expecting such a price move ahead of the halving, but again, that was me comparing to previous cycles. So this one is, like I said, it's very different.
Sorry to interrupt. Just want to tell you about Blockworks' upcoming crypto symposium in London, the Digital Asset Summit, which is running from March 18th to March 20th. Everyone in crypto is going to be there, not just the experts and policymakers, but the real industry leaders writing the checks. Over $800 billion in assets is going to be represented. Anyone who's anyone in crypto is going to be there. So if you're into crypto and you haven't bought your ticket yet, the time is now to get your ticket. I would not wait any longer. We've got some exciting guests on the macro side too. Julian Brigden, Michael Howell, and yes, I can confirm at last, the rumors are true. Joseph Wang, the Fed guy himself, is going to be there too. I'll be hosting a panel with these macro heavyweights that you don't want to miss, so be there or be square. Click the link in the description and use code FG10 to get 10% off. Thanks, let's get back to the interview. For our audience who are not viewing this as a video, but who are listening to this, I just want to say, you're talking about a virtuous cycle of, as the price of Bitcoin goes up, people buy more Bitcoin. But what about if it goes the other way, So don't you want true believers in Bitcoin, not people who are just, I'm buying it at 50,000 because it's going up to 60,000?
Okay, so right now, people positioning in it, they're allocating small allocation of their portfolio. So that's going to be on the risk part of the portfolio. They're going to be put 2-3%, something like that. I think Fidelity recommended to put 3%, right? So if they put 3%, it's basically like it's priced like an option. Like you let it write and you see, you're willing to take the drawdown, you're fine with it because it's a small position in your portfolio, right? So it's all about positioning at the stage. Now, if it goes down, you don't have too much downside versus your entire portfolio. If it goes up, greed is going to kick in 100%. 100%. Human
nature.
And then on a drawdown is going to be a bigger problem because they have bigger allocation. And then the fear is going to kick in. But for now, because everybody's recommending small positioning versus the portfolio, I think people it's going to keep going for a bit.
Got it. So we just talk about Bitcoin. Let's talk about another commodity which has a pretty inelastic supply, uranium. You've been long uranium. You even wrote about that as a long trade. It's gone up a lot. How are you seeing that play out? Tell us your thoughts there.
The supply, the supply chain on uranium is, basically the demand problem is there. We know it. We know the demand is going to grow. We know a lot of countries are committing to develop more nuclear. We know it's the only way they can have a chance to reach their numbers, in terms of CO2 emission.
Yeah.
I think the trade is on for 5 years, to be honest. He had a decent correction this year. He had not performed too well. But I think the structural problem in terms of supply demand is there. It does exist. You see too many countries, more and more countries adopting it. So I think it's going to work well. And it's definitely a trade. Now on the correction, it's definitely a trade to add if you don't have. It's a long-term trade.
Long-term trade. So yeah, I mean, I do not have a position in uranium, but I have looked into it, and it's very interesting because talk about the supply dynamics. Again, I'm not saying this is a good thing for the world. If uranium is, very much needed to meet CO2 reduction targets, it should be cheap. But I think the reality is a bunch of the spot market of uranium is bought by the investment community through products, ETFs or trust or whatever. And power producers, the utilities, they buy mostly in the term market. So, and the supply comes from mines, which take a really long time to go. So, yeah, how high do you think the price of uranium is going? It went over 100 pounds, right?
Yes. Opening a new mines take about 15 years, so that's not possible. Ramping up production is complicated, so that's why I said 5 years. You have a 5-year gap here, where you have the physical uranium ETF that's been like sucking up uranium big time. Talking about data centers and stuff, they're gonna need powers. All of them, all of those centers are gonna be over, so it's gonna have to come from somewhere as well. Eventually. I mean, I think it's a good trade. It's a good trade to have. I think it's if it's one to have in your portfolio, definitely. And I really like the correction now to add. To be honest, I might do it actually.
Nice. And you're, as viewers may suspect, you are from France, where I believe they are pretty into nuclear power. But your neighbors to the north, Germany, they have been pretty reluctant to embrace it. And even as they're talking a big game when it comes to environmentalism, they're shutting down nuclear power plants. What do you think about the rest of the world's embrace of nuclear power? There's been a pretty strong anti-nuclear power bent in pretty much most countries other than France. And add on to that, if all the hedge funders buy it and it goes to $300 a pound, I can imagine some politicians saying this is being manipulated, blah 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 blah, which they may be right, but
yeah. When I grew up in France, I was going to school 20 miles away from a nuclear plant, from one of the biggest in France. No problem, nothing. No, it's safe. We never had any risk, never training, never a warning, never nothing. Right now, and that was 30 years ago. What we saw is, a lot of people that were anti-nuclear, they were pushing for wind or solar. So what happened is basically you have those people fighting against each other. And for decade and a half, it was solar, wind, and turbine taking over. And it was like, that's the one you have to look at. And it's funny, when I wrote about it in October, I think, I saw 2 videos, and I saw a video from 2010 with a debate between someone that was pro-solar and someone that was pro-nuclear. And when I watched it, I was like, okay, that's what basically nuclear. And I realized that nuclear people have been fighting against that, okay, it's cleaner, it's better, it's this and that. The reality is, since 2011, since Fukushima, there's no event that happened. Nothing broke, no risk. But it's when you think nuclear, you think Hiroshima, you think power, you think bomb, basically. You don't think about electricity. So if people, what come in their mind is that, the atomic mushroom, if you think nuclear eventually. And I think, this is something that Josh Wolf said, that a good thing would be to rebrand nuclear power for energy, for example, and call it elementals.
Call it what?
And call it elemental. Basically rebranding the name of uranium for energy. Then it's not called nuclear. And then in terms of perception from the people, when you talk about it, they're not scared about it. And I'm like, you know what, that makes sense. If you split the two things, nuclear for weapon and nuclear for energy, they're two different things. And people are fearing one and stop the other, basically, for too long. And I think now it's definitely the way to go. You see India embracing it, you see China embracing it. There's no choice.
Very interesting, Remi. Thanks for coming on. Finally, just tell us about the work you're doing at the Mad King, and maybe can you tell us a trade that you're looking at that we haven't discussed so far on this program that you're thinking about with your work at the Mad King?
All right. Basically, the Mad King is a newsletter. Macro business, tech, a bit of crypto. And what I do is, I cover macro trends or macro topics in a very where I simplify everything as much as I can to make it easy to understand, easy to digest, more importantly. And focusing obviously on tech a lot, macro a lot. Now starting to bring crypto a bit because it's moving, and I want my readers to be on top of it. I cover the business cycle. I cover a lot of things. I went from uranium to India to Bitcoin not long ago to a lot of stuff. And usually I also like to take a contrarian view on things because I think if you can have more edge like that. And so it's different of the other macro newsletters. It's very different. But so far, the feedback has been good. Got a few hundred people sign ups. So, Grant Williams has been helping me a lot. So it's been great. And look, for your podcast, actually today I activated a free trial for you viewers. So I don't do free trials or anything. Now for a week, I'm going to leave the trials on. People can sign up for a free trial, no credit card, no nothing. And it's at themadking.com. Find the sign up stuff, flow but yeah, see, that's the kind of stuff I'm going to do it for a week. Then I shut it down, and then we'll see. Yeah, I saw that to do that for you as a thank you for your viewers. Just like, yeah, it's cool. And regarding trades, I really liked, we talked about it quickly about the home builders. Like I said, if they survive and they've been thriving through high yield, going forward, they can only go up. So it's actually quite an interesting trade.
As a long, Homebuilders as a long.
Yeah, long. Now, I don't short. I tried to short this year at the beginning of the year and be clever, and that didn't work out. Shorting is too. I'm not. The time. It's too time sensitive. And right now, considering the dynamic in place, I don't think it's wise to short anything. One trade that is interesting is the defense sector for Europe. It's growing a lot. They need basically to ramp up military spending in Europe to catch up, and companies in Europe in the defense sector are quite well positioned. Actually, this is an interest. That's something I've been looking at, and I'm going to be looking at.
Homebuilders and European defense, very interesting. We'll include a link for the Mad King in the description. Thanks for coming on, Remi, sharing your insights, and thanks everyone for watching.
Thank you.
Thanks for watching. Remember to check out vaneck.com/HODLFG to learn more about the VanEck Bitcoin Trust, ticker HODL. A reminder that forward guidance episodes are available on all podcast apps and on Twitter, where I post them regularly at JackFarley96. Thanks again. Until next time.